So, Monica, Andrew just telling us there about, why we're seeing records for oil. And I'm just curious as to how much you think this is going to add to the Fed's inflation problem.
Well, at the moment, I think at this level, the pressures are relatively contained. We estimate that Brent crude will average around $83 a barrel, broadly in line with last year. So while we don't expect to see the same drag to headline inflation in the US or globally from lower fuel prices, at the same time, it's not going to add that much inflationary pressures. And I think this is something that OPEC Plus will look at carefully. Of course, there's from their side the tightening in fundamentals, but they will not want oil to sustainably move to a level that will destabilize the global economy, add to inflationary pressures, and reduce the chances of rate cuts from mid to the second half of the year. So oil will play a central part. But at the moment, there are still some uncertainties, both vis-à-vis demand. We're seeing support from geopolitics, and this is uncertain as well. So we expect a wait-and-watch approach.
Obviously, OPEC Plus is pleased with these prices. The Joint Ministerial Committee meeting later today expected to affirm the production cuts but not extend them or anything like that until June at least. But at the same time, they're not meeting them. So why, what could we expect sort of from future meetings, if you like, Monica? What will the conversation be today?
I think a lot of the conversation will be looking at individual targets, looking at who's producing and the production levels against target levels. So that will be number one critical point. Russia adds a degree of uncertainty as well, because, of course, we've seen those attacks on the refining installations, but they have also come out and said that they are going to cut production and exports to move in line with their commitments to OPEC Plus. So I think that will be an area of discussion. And I think, again, the critical point will be, where are the fundamentals? We believe that the oil market turned into a deficit in February. The production cuts were central to that. And where is the demand outlook? And as you know, OPEC forecasts for demand are significantly stronger than the IEA's. So I think that'll be another area of focus as well.
Monica, I want to make just a little bit of a hard pivot here to Egypt, because, of course, we saw President El-Sisi sworn in, and he's now going to serve until 2030 at least. What is your outlook for that economy, given the $50 billion injection that it's presumably going to see over the next several years?
Well, really, this injection, and starting off with the Ras Al Hikmah deal, with the injection from Abu Dhabi, this is really a game changer. It gives significant FX liquidity to meet Egypt's funding requirement for the next 2 to 3 years. We've already seen a change in market sentiment, so the access to foreign capital, the flows into Egyptian debt, that has picked up as well. Yesterday, you could see the impact of the FX inflows on net foreign liabilities in the monetary system, and how it's helped reduce the net foreign liabilities. So I think it is significant. What will now be critical will be the structural reforms that follow, and that is both to reduce the current account deficit sustainably, improve the competitiveness of the economy, and especially on the fiscal front, reduce the debt levels, reduce government funding requirements and debt costs. And central to this all